Welcome, everybody, to the New York Alternative Investment Roundtable April virtual event, a virtual fireside chat with macro and cryptocurrency pioneer Michael Novogratz. I'm a 6-month investor in the field. I'm eager to hear what he has to say. I am Stanley Goldstein, and I started the organization some 20 years ago. First off, I'd like to take a moment to thank our roundtable sponsors. We are grateful for their continued support, and without them, we would be in big trouble. All right, a few logistical issues. This event is being run as a webinar. This means you can't see other attendees. It's the most secure way of holding the events, but it doesn't mean we don't want your active participation. Please use the chat or the Q&A functions. And now for today's event. We're lucky to have Michael Novogratz, the founder, CEO of Galaxy Digital, as our speaker. Prior to Galaxy, he was president of Fortress Investment Group, and before that, spent 11 years at Goldman Sachs. He was made a partner in 1998, and my friends there tell me he was the smartest kid in the block. He served on the New York Federal Reserve's Investment Advisory Committee on Financial Markets from 2012 to 2015, and having made criminal justice reform a focus of his family foundation, he currently serves as chairman of the Bail Project. He also serves as chairman of Hudson River Park Friends and sits on the boards of NYU Langone Medical Center, the Princeton Varsity Club, the Jazz Foundation of America, and Artists for Peace and Justice. Today's moderator is Rob Christian, co-chief investment officer and head of research, Franklin Templeton K2 Advisors. Prior to his current position, Rob was the global head of directional trading strategies and portfolio advisor to numerous funds at FRM Americas, including its award-winning FRM Sigma. And before that, he was the head of macro strategies at Julius Baer Investment Management. He also spent several years as a portfolio manager and researcher of quantitative-based trading strategies for Graham Capital Management, and as a portfolio manager and researcher for Modoc Capital and Stoneberg Capital Management. And now, Rob, please take over.
Thank you, Stanley, for having us, and thank you, the New York Alternative Investment Roundtable, for sponsoring us and having Mike. It's always a great pleasure to catch up with Mike on everything. But Mike, I thought today maybe we'd start out from a high level global macro perspective, just because flows, liquidity drive, relative pricing. But maybe go back to your previous, I know macro's in your blood, but if you could talk about kind of how you see the macro environment today and things that are critical to you and to investors.
Sure. So I think the biggest thing to think about is that, Stanley's probably the oldest guy on the call.
Correct.
And even Stanley grew up in an environment when we always had this idea of independent central banking. So every investor alive almost today had one paradigm, that we would have this idea of independent central banking. And it became a religion globally, really, in 03, 04, 05. We thought we had, at one point, this idea of inflation targeting central banks, that we had beaten the business cycle. They talked about it at Jackson Hole. And, 15, 16 years later, for the first time in any of our careers, we don't have independent central banking. Metaphorically, in a spectacular way in the US, the Secretary of the Treasury is a central banker. There's something meta about that. And so we have Treasury departments, Ministry of Finances, and central banks all over the world collaborating to finance deficits. None of us have ever lived in an environment like that. And so our risk management frameworks have to at least be questioned. What's expensive? And you're seeing that all over the place. Value. I bought a $1 million LeBron James basketball card because I think it's going to be worth more. So if it's trading cards, or now NFTs, or cryptocurrencies, or Tesla, you're seeing asset price appreciation and new ideas of what value, or where we keep value. That's all based on this idea that we threw out 50 years of our training, of our belief system, and we now have this excessive printing of money. And so when I frame it, there is a chance, though a narrowing window, that Chairman Powell and Janet Yellen and their contemporaries in the other big central banks land the plane, that they run inflation just hot enough and get growth just strong enough that it creates a surplus, and we start paying off the deficits, and these deficits look like they're going to grow forever, start reversing. And we have what Ray Dalio wrote about in 2008, a beautiful deleveraging. There is a chance of that. But the markets are telling us, the crypto markets are telling us that there's a growing possibility and a growing probability that they're not going to be able to land the plane. We might have some big cyclical upturns, but we've lost that fiscal discipline. We've lost that belief system. We've lost the German in us all. And that's what the markets are telling you. And so from a macro perspective, my really simple thesis is you want to stay long assets and you want to have a monstrous hedge on the belly of the fixed income curve. So I'm short, late 2003, 2004 Eurodollar contracts, both against my crypto in my public company, but also in my macro portfolio against everything I own. The thought being, this party continues unless Powell flinches or the market forces him to say, dude, we're getting $1 million, jobs numbers 2 months, 3 months, 4 months in a row, and inflation's picking up and wage pressure is showing up. And I was just in New Orleans, and you could not go to a restaurant where the maitre d' of the restaurant said, we can't hire any labor. No one will come back to work. Right. I was like, well, maybe you should try paying them some more. And so we're going to see wage pressures. We're seeing it in trucking. We're seeing it in the quick serve restaurant business. We're seeing it all over the place. Is that sustainable? We'll see. But so that's my portfolio construction. I know it's everybody's portfolio construction. So you're going to have ups and downs in it, right? Fixed income's had a nice little rally. And so if you started the month max short fixed income, you're not feeling great right now. But I think and one of the advantages of not being a macro trader that literally trades every minute like I did when you were invested with us, Rob, but being so busy and building a company that I can only spend about an hour a day on macro, is that you don't overthink it, right? It's the bigger trends. Yeah. And that trend seems really powerful right now.
Now, there is something to keeping it. You always keep it simple and don't overthink it. And that's probably very applicable today. How do you view, so there's this tremendous supply of money printed everywhere. Yesterday, you saw the Bank of Canada make some hints that maybe they would pull back. It rattled those markets for an hour or so. But how do you see Powell and the central bankers trying to get out of it? So they're more and more in a pickle in the corner. But what's your timing where they have to land the plane, and how would they go about doing that, you think?
So what's interesting is when I first became a macro investor, I did a lot in emerging markets. And just a general economist intuition would be shitty fiscal policy, yield curve should steepen. And that was 100% the reality of being an emerging market. And so there was a market force discipline that policymakers in places like Brazil or Argentina or Thailand had to live with. And often because the political regime wouldn't have any of that discipline, they would just get eviscerated. You would have, I was in Brazil in 1991 with hyperinflation, and it was kind of crazy. You saw it in Argentina even today, or Turkey now, and Zimbabwe. And what was always interesting was in the developed markets, there was no correlation between fiscal deficits and shape of the yield curve, none. And I sat there and think over and over, and then the thesis, and people talk about this thing called the Minsky moment, when confidence breaks down and yield curves just start steepening. When there is a zone out there, you don't know where it is, but when you reach it, confidence goes. And you go from being a developed market to an emerging market. Thank God the G10 hasn't done that yet. But there's a place out there in the yonder that we run into that, and we don't know where it is. And so if you're a central banker, you're dead scared of it, right? And so you're constantly looking at the long end. If the 30-year starts breaking down and can't rally back, we might be SOL, right? Shit out of luck.
Right.
So it's that balance between the shape of the yield curve and, quite frankly, the currency, right? Because and it's the currency not just versus the dollar versus the euro, the dollars versus the yen. It's the currency versus gold. It's currency versus Bitcoin. It's the currency versus the equity market. It's the currency versus, assets. And can you keep a controlled devaluation without it accelerating? And that they're monitoring that, at the same time having a real social mission, because for 36 straight years, the Gini index has gone one direction. I gave a speech at the Milken conference in 2006 when I talked about inequality being so stretched that it usually ends in revolution. I thought in 2006 it was as bad as it could get. It went 15 more years in one direction. And now we have inequality that's at the theater of the absurd. And so there's a social need in some ways, right, to be progressive with your fiscal policy, lest we have revolution. And so it's a really challenging gig, right? You're going to have to start raising taxes. That's not politically popular. But at one point, and I always think Bitcoin is like a report card on how central banks, Ministry of Finances are doing, and how governments are doing, right? Bitcoin is going up right now for two reasons: because of mass adoption, but also because people are scared shitless about monetary and fiscal policy, right? It had its huge surge post-COVID because of the response, just like lots of assets. And so it's almost an essential asset to have something invested in, because it's such a good gauge of, when you said, like, how in the big picture are we doing?
Yeah, you said something, I don't know exactly when it was 6 to 8 weeks ago, but on one of your media events, but how if you're not long Bitcoin, you're short Bitcoin.
Yeah.
And that really, at first I was like, oh, Mike's making a kind of an outrageous comment. And then the more and more the days went by, I kept thinking about it. And that's exactly spot on. I think it's all this, if an investor's not long, therefore you're short, and maybe your peers are long, and you're seeing that with some companies, right? Corporates putting it on their balance sheet, institutions.
Listen, what's interesting is rarely do we have new asset classes build. And, right now, Bitcoin's about 0.5% of global wealth, right? It's $2 trillion. Global wealth is probably 400 plus trillion dollars. In general, new asset classes migrate to 6 to 8% of someone's portfolio. Crypto is a complicated one because, you've got Bitcoin, which really is a digital gold. So it's a store of wealth. You have other stores of wealth. I mean, shockingly to me, Dogecoin is nothing but a place where young kids are gambling and storing wealth. Litecoin is a poor man's version of Bitcoin. I don't think it should exist, but there's still a community of rabid people that buy it. But most of the other cryptos have purpose. So if you're Ethereum, or now Solana, which is a new coin that everyone's hot about, you're building a decentralized global supercomputer for processing stuff. And what are you processing? You're processing you're building this new architecture for payments through stable coins and different payment systems, through what we call decentralized finance, taking a blockchain to financial services. If I was a bank, I'd be scared out of my wits by companies like Compound and Aave and Uniswap, SushiSwap, because they're driverless banks and driverless insurance companies and driverless exchanges. They're code. So they're hard to regulate because they're code. They're much cheaper because you don't have all this infrastructure. And they're hitting an ethos of what people want, which is cut out the middleman, right? They're peer-to-peer. And so, both from a Gen Z, a millennial, but a complete global ethos, which is a breakdown in trust in the center. And so all of that stuff being built on Ethereum or Solana or these different blockchains is creating huge value there. And then you have things like NFTs, which is revolutionizing how we think about intellectual property, from music to art to collectibles. And there's a little bit of a bubble there right now, but the underlying tech is the same concept that we did with Bitcoin. The technology allows you to, the genius of Bitcoin, and it took me a while to get this back in 2015, and I kept getting asked to give speeches, and there was all these computer science guys, and I barely knew how to turn on a computer at that point. What I realized was the genius was it was the first digital signature you couldn't counterfeit. And that sounded like a simple sentence. And I was like, wow, that means you can say there's 21 million Bitcoin and there are only 21 million Bitcoin. You can't copy and paste and, counterfeit and make 21 million more. Well, the same thing now is applicable to art, right? This button could be a digital 1 of 1 or a 1 of 1,000, but there can be a belief system now that if I say it's a 1 of 1, it's provable and everyone believes it. And therefore it gets value. And so we don't really know what the TAM of this space is because it's developing so quickly. But I know it's a lot bigger than people think it is. And so when I say, if you're not long, you're short, when I first started this, it was a maybe. It was really venture-y. And now we've got major insurance companies buying Bitcoin as a long duration asset. We've got asset managers like Guggenheim and BlackRock getting involved. We got every hedge fund I know being involved. Got lots of the wealth channel, right? We started a program with Morgan Stanley. Let me tell you, Goldman Sachs and JP Morgan and UBS, they're all right behind. And so all this new adoption in easy access makes it an asset class. 2 years ago, everyone was calling, all the crypto people say, dude, you got to get Ray Dalio involved. And I'd be like, Ray Dalio's got a $125 billion hedge fund. He can't play in this little tiny pond. Our pond was too small for Ray Dalio, and now it's not. And so there was time it took to build the infrastructure and the size of market cap necessary to bring in insurance companies in Bridgewaters, in Tudor Jones, and Stan Druckenmiller, and BlackRock's. But now the market's plenty big for everyone to participate. So they're all saying, oh shit, I'm not in, I'm short. And so while things might go sideways at times, I know because I see it, there is demand below the market, right? The animals are on the move.
Yeah, no, I see it from where I sit as well. And it's very strong. There's absolutely no question. But that's why that statement just keeps kind of ringing through my head, and it has a lot of meaning to it, definitely. That said, so you have this tremendous investor demand due to the environment we're in and lack of yield printing of money. You have this fantastic technology that's foolproof, fraud-proof. You can create your piece of art. Someone can sell it. They know exactly they're getting it. But it's part in the middle, right? It's the humans that are maybe causing some of the problems. Today, you have the exchange in Turkey, possible fraud and stuff. So I know you're very active in the regulatory environment, but what can the regulators do to make it more? We're certainly getting to investable. I mean, you told me to buy Bitcoin back in. I was going through my notes back in 2009. To your credit, you're like, Rob, the one thing you should do is buy Bitcoin in April of 2009. And I tried to do that, and it wasn't so easy. You had to find a place, and I opened up an account on an exchange. 2 weeks later, they evaporated, and now the market's definitely evolved from that. But just in the offshore world, it seems like there's still pockets of
yes. Yeah, so let me talk to that for a second. Yeah. So let's be really clear about the structure of the market. Bitcoin started as the people's revolution. It was a middle finger to the system, right? And there were no institutions. In the 2017 rally, literally it was 99% retail. It was the little man's fight. It was Mr. and Mrs. Watanabe in Tokyo, or Kim in Korea, or you name the cliche, they were participating. It was the first global revolution. The Asian exchanges, Binance and Bitfinex and Wobi, were unbelievably fast at iterating Macau 2.0. They tapped into the Asian love of speculation and created a perfect gambling tool and offered 50 to 1 leverage, 80 to 1 leverage, 100 to 1 leverage. I mean, think about it. I'm a rich guy and I can't get 1.5 to 1 leverage at I guess the Korean guy did with Archipelagos, but I certainly can't when I call and want to, go long or go short Tesla stock or go long something. The amount of margin I have to put up is crazy. Retail getting 100 to 1 leverage. And so what we're going through now is this handoff from a predominantly leveraged retail market to one where institutions are taking a bigger and bigger pie. What should happen is volatility should come down over time, but we still have a lot of that froth. And so what you've seen in the last 3 weeks is a lot of really useless coins in lots of ways have these amazing spikes. Even Dogecoin, which is a meme, getting to a $50 billion market cap. In lots of ways, it dings the credibility of the space, but that's a growing pain. And I think regulators get that. And so their job, and so I know Gary Gensler well from my days at Goldman, but also just following his career at the CFTC and speaking to him, quite frankly, while he was in between. He taught a class on crypto at MIT. I actually was a guest lecturer there once. He is smart. He gets it. And the best thing he can do is just set rules that are clear. Jay Clayton wanted nothing to do with crypto. So he was like, hear no evil, see no evil, speak no evil, right? He just didn't want to make a decision on it. Gary will be a very different head of the SEC. And so as those rules get laid out, yes, it'll benefit some, it'll hurt some, but it lowers volatility because there's clarity. There are tricky things about crypto. The biggest is know your customer, right? Why DeFi isn't 10 times bigger already is regulated entities like us don't use it. We invest in it, but what DeFi is me trading peer-to-peer against a smart contract. So if I trade against a smart contract, I can argue in court, I have no customer, it's a smart contract. But the regulator might say, yeah, but on the other side of the contract, there was, Kim Jong-un. How would I know? We're not willing to take that risk that the regulators will say, oh, you guys are okay. And so pretty soon, I'm going to trade against a smart contract and it's going to have a blue check, meaning the other person's been KYC'd. I won't know who they are. I don't need to know who they are as long as they've been KYC'd. And so as that regulatory improvement happens, you're going to see an explosion in the use of these products. And so I think there are other risks in regulation, right? You see it in China right now, you see it in India. They're like, well, we're okay with Bitcoin as a store of value, but don't dare try to get into payments because that starts worrying us about our currency that we're very irresponsibly managing. And so this is going to go to and fro. And again, the US knows from the top to the bottom now that it is an imperative that they have a digital dollar because China has a digital crypto renminbi coming out. And so you're going to see more and more countries, Brazil, Europe, or collections of countries, central bank issue digital currencies. That's a big term. That can be a very centralized version, like in China, where the government knows everything about everyone who's spending money, very dangerous, or it can be a more decentralized version. I think the West is going to opt for more decentralized versions, and I think that will win out in the end. But this is the kind of drama that you need to start following, even if you're not a crypto investor, because it's going to have huge impact on the rest of your portfolio. You can't be a bank investor right now over the next 5 years and not understand what's happening in DeFi. You can't be a payments investor and not understand what's happening in payments around crypto. And everything's not intuitive. When I first got into Bitcoin, my friend Dan Moorhead and I were talking, we're like, man, we should short Visa because Bitcoin would have been the worst trade of the century. Right? Visa went straight up the last 10 years. Guess what? Visa's got a monster crypto organization now, right? They get it. Yeah. The tech companies will bite off their arm to grow a new one. And we're going to see if the banks will, right? This will be the bank account of the future. You will have a crypto wallet, not 50 apps with 50 passwords, but one crypto wallet where your money and your insurance and your tickets reside. And so that's why Facebook and PayPal and all of these guys are rushing in. You'll see Apple, mark my words, that Apple wallet will be crypto compliant really soon because they know that's where the future is going.
Yeah. Where do you see value today? If you have these corporations that are getting involved, you have some direct mining stocks that are listed. You have these different pockets within the blockchain technology, but where do you see value today? If for the
in some ways, the simplest bet is buying Bitcoin and Ethereum, as Bitcoin as the store of value and Ethereum as the proxy for all of this Web 3.0 stuff going. Mm-hmm. That's the simplest bet. We have at our own firm, we have a Bitcoin fund, we have an Ethereum fund and an Ethereum ETF, a Bitcoin ETF up in Canada. That's the simplest way. I do think a company like Coinbase, people said, oh, it's expensive. I said, listen, it's going to stay expensive. A, they're doing a huge amount of business, and B, it's the first real kind of big, well-run infrastructure play that's in the US markets. And so I think it continues to have a brand, continues to be a bellwether. I don't like the mining stocks at all. I like mining, but when I think of mining, I think I'm buying deferred Bitcoin, right? I'm putting three ingredients together: chips that have a half-life, electricity, I got to have cheap electricity, and a little bit of just, execution, right? You gotta mine the things. And that certain amount of money should make me a certain amount of Bitcoin. Well, it's just, in essence, deferred Bitcoin. And so why should it trade at a 10 multiple or a 12 multiple, right? In some ways, it shouldn't. It does because people are looking for access. And if you look at it in dollar terms, it looks like, oh, what a great IRR, because it was just like buying Bitcoin. It was a great IRR too. And so I wouldn't be a big equity investor in mining companies. I like mining. We have a big mining operation here. And so I would separate mining from the equities that mine. We're trying to build a company that has the smartest guys in the room in every one of the spaces that encapsulates the whole ecosystem. So we have 50, 60 balance sheet investments and another 50 in a fund, from protocols to DeFi tokens to NFTs to NFT infrastructure to insurance companies to custody, the whole 9 yards. We have a banking business, a trading business, an asset management business, and so when you put it all in a mining business, so we're trying to be kind of the generic bet. We trade up in Canada now. In our last, earnings, we mentioned by the second half of the year, we want to be in the US. And so that's kind of our plan. I'm sure there will be other stocks that are worthy of people buying that end up showing up there. But right now, they're not a lot. So I think Coinbase probably continues to trade fine. The most exciting part of the space, but very hard to participate, is in the early stage venture stuff. And there used to be a couple venture funds, I'd say, put your money in those funds. They've grown so big, so fast. Poor Rob was an investor in my macro fund, which had amazing returns. And then all of a sudden I got to $9 billion. And, we tripped in 2008 on a stick, a big stick called Lehman Brothers and a few other things. It's much harder to run a $10 billion fund than it is a $2 billion fund when they go that fast. And so one of my worries about the big crypto venture and hedge funds is they've gone from, even if they're well run with smart guys, they're now $8-9 billion under management in illiquid stuff that trades at 80 vol. That's not easy. And so I think if you're going to do venture, I would look for smaller funds, maybe younger and newer guys. But that's give someone else your money to manage space. Don't try to like start picking the tokens off the board just because your friend said it's a cool token. A lot of the value that gets created in that first, 8 months where you don't have access to the thing. And so simple advice, buy Bitcoin, buy Ethereum, and then do your homework around a few stocks.
Gotcha. One thing that surprises me, and just being starting in the currency and futures markets, but the major currencies and metals markets all have very deep and liquid forward markets. That doesn't seem to be the case in Bitcoin and some of these other major currencies. Now there are futures contracts now in Chicago traded.
But so let's think about this for a second. It's really a simple answer, and it's going to change. 2 years ago, when Facebook was going to do the Libra project, it's now called Diem. Facebook, one of the biggest 5 market cap companies in the world, couldn't get anybody to bank Libra. Nope, not banking it. Nope. And so no traditional banks have lent money to crypto companies, right? We have a $2 billion plus balance sheet, and I can't call up Goldman or JP and say, dude, give me a $200 million revolver. It's just, they haven't checked that box yet. It's coming, right? They're willing to bank us now. They weren't willing to bank us a year ago. They'll be willing to lend soon enough. And so the cost of capital inside the crypto ecosystem is really, really high. And it's high because there's so many opportunities. So like, I pay a lot for deposits. And you could knock our business down 75%. We'd still have plenty to pay the guy back. But we're slowly building, connectivity to lenders who will see this thing. I mean, remember, people were scared to buy it, let alone lend against it. And so in time, the cost of capital within the crypto ecosystem will come down, and then you'll get much more liquid in rational forward markets. So there's a great business that we run of just arbitraging these 26 exchanges in futures. And, all my excess cash is always in basis. And it's not basis like, we're making wildly leveraged a few extra percent. It trades 30, 40, 50%.
Yeah. No, that makes sense. But you do expect over time the markets will become more efficient.
We're already seeing it.
Yeah. No, I'm hearing more and more people entering that space, which makes sense. So today's Earth Day, so we got to talk a little bit about restoring the Earth, I guess. But I know there's this two sides of the debate if Bitcoin and mining is good for the environment or not good for the environment. And you've made some public comments on that, but maybe could you talk a little bit about what people are missing when they think of mining and the environmental impact?
Yeah, so there's a couple ways to look at it, right? We have a group that's writing a paper on it, and I was like, wow, that all makes sense, but it sounds defensive. And the defensive argument is, my God, toaster ovens take a lot of electricity. We don't cook our toast under sunlight. We use a toaster oven because it's so much more efficient and we gain efficiency. Washer and dryer, same way. The service Bitcoin mining is providing way exceeds the cost. And so why are we being picked on? I was like, guys, I don't think that argument's going to win, even though it's rational. Listen, if you think about what Bitcoin is, it's like a battery, right? It takes electricity and stores it in this value that can then get transferred all over the place. And so most Bitcoin is migrating to the places that electricity is cheapest. Often that's excess green energy, right? It's up in Iceland, it's Texas wind farms. It's because you don't need the consistency. And so the Bitcoin community also knows there's a ESG movement out there. And so I think what you're going to see is both a natural migration and a forced migration of Bitcoin mining to greener and greener places. There are a bunch of programs in the works to, make Bitcoin carbon neutral by 2040 or 2050. Carbon capture plans and others. Because as the ecosystem grows, the electricity usage will grow. We don't want it not to be expensive. It sounds counterintuitive, but like if you're storing a good chunk of the world's wealth, it should be expensive to store it, right? Yeah. You don't want it easily hackable or breakable or attackable. And so there's a real utility that you're paying for. And there's a consciousness now of making sure it's not wildly additional. Like if you look at, it was funny, JP Morgan was attacking crypto as a, non-green thing. And I realized they're the single largest lender in the world to ExxonMobil. Like the amount of hypocrisy in and around this green thing is kind of real. And so I would just tell you, the Bitcoin community is very focused on getting this narrative right. There was a brilliant paper written by a Norwegian billionaire about this whole idea of it actually being greener because we're storing electricity in places where that gets used elsewhere. I know that's not a great answer, but like there is a reality that it does use a lot of electricity. I'm just telling you that there's a consciousness now that there's a push to making that greener.
Mm-hmm. What about the other two parts of ESG? Obviously, it seems like Bitcoin hits squarely in the middle of the target there on the social side and the governance. So to your point, it's keeping governments accountable.
So what's so interesting
be recognized?
What's so interesting is like, what kind of political forces Bitcoin? I would tell you, if you looked at my Twitter, it's rabidly libertarian. But I think sometimes they get it wrong. So the libertarians love cutting out the middleman, cutting out the government, the FU to the system. But I think it's wildly progressive. It's transparent. It cuts out the rent taker, right? The famous book, Where Are the Customer's Yachts? Right? It goes right to the heart of the rent taker. In art and IP, it says, hey, the artist is going to continue. You can build in every time that painting is sold, you get another 10%. You get 10% of that new additional, delta between last price and this price. And so it really has the ability to be one of the more progressive movements, right? It was the people's movement in some ways. And so there's a tension, and it hasn't done a good job of selling itself. I mean, a lot of progressive politicians, seem to be anti-crypto, and the ones that are pro-crypto are really hard right-wing Republicans. I mean, I sit pretty far to the left, and I'm like, you guys are all missing this, And so, listen, it's going to play out over the next few years. When you think of things like UBI, which is coming in some form, already is here in America, crypto wallets, a wallet ecosystem, make that so much more dignified and fast and easy. So I think we're going to get there. And it's transparent. And so when it comes to governance, like I do a lot of prison reform stuff. And one of the guys who just got out after 20 years was like, dude, we got to put the blockchain in prison just so you can actually see what's happening and go back and say, this guy did this and didn't do this. There's something really powerful about a database that you can't erase. And that's transparent, and lots of people can look at it and program on.
Yeah. Well, it's a great transition. So it seems like your philanthropy just keeps growing faster than Bitcoin even. But can you talk a little bit about Galaxy Gives and where the organization's involved?
Yeah. So I originally, my brother came up with the name Galaxy, and I'd been on a retreat with Richard Branson, and I was just inspired by how everything was virgin, and that he created this brand and his personal brand, and he used that for lots of good. And so we just switched our family philanthropy to Galaxy Gives because we thought it was a catchy name. a riff off of Goldman Gives, I guess. And started, I made a big windfall in 2017 in crypto and impulsively donated a lot of money to the Bail Project. I heard a woman's pitch. It was 9 minutes. She had me at hello, and realized if I was going to have given that much money and going to be the chairman of board of a pretty key pillar of the criminal justice, landscape, I better understand criminal justice. So I hired a couple of guys, and the more we looked in, the angrier we got. It is just one of the most corrupt, stupid systems, racially unjust, economically unjust, but just dumb, economically unjust, like an economic waste. And so we really started investing in people and investing in projects in and around that landscape. And it's become a huge part of my life. One of the exciting parts of, at least on paper, having made tons of money, is to allow that team to dream bigger. And so hopefully in 2022, 2023, we'll do cooler stuff. What we did learn, though, in both, because we do democracy as well, that our model for growth down there is to invest in people on the ground. This idea of empowering people and listening to them. In our political giving, we gave to local organizing groups. And it was like, if you want to get out the vote, they'll know how to get out the vote much better than me going down there and thinking I know how to get out the vote. And so we raised up to $75 million in this last cycle, literally to invest in the infrastructure of democracy. And it wasn't my money. Some of it was my money. What was interesting is, by not naming it after you, by having, this was called One for Democracy, by having partners that are vested in it, you can grow these platforms and ideas much quicker than any one guy can. It's a little bit of the same thesis as crypto, of decentralizing good ideas and letting people own them and participate in them. And so I think a pillar of what we do at Galaxy Gives is going to be incubating these ideas, staffing them, funding them, and then letting them grow on their own.
What can people do? Because I know there's people logged in here, and given the state of the world and events that have happened over the last year, and then hear someone like you talk, you get, like, I know sometimes I have this issue. So you get very motivated. You feel like you want to do something to help. And then you get off the call, and tomorrow morning, you're just kind of like, well, what can I do? You're almost like a deer in the headlights. So what would be your advice to the people here on the call? What can they do to besides, we can always write a check, but what
so
can
I'll give two
beyond?
Separate answers. So if you're running a fund or if you're running a company, and I learned this, when George Floyd happened, I was marching in the protest. I was giving more money out. I was completely engaged, but my company felt like we didn't do enough as a company. And my early response was really angry. I was like, what the, who's up? Walk downstairs to the 7th floor, right? Galaxy Digital's on the 8th and our philanthropy's on the 7th, and get engaged. And then I realized there's no reason to get mad at the people. They wanted to be more engaged. And so we started more communication with the company about what we're doing downstairs. But we also started just a monthly series where we bring in speakers. And, we brought in the Women Runs the Bail Project. We brought in a filmmaker who made this movie, American Skin. And there have been some of the best culture builders of our company. And I learn a ton just listening to the questions each time about what my young people want. They want more diversity in how we bring people into this company. Yeah, it's easy to go Princeton, Harvard, Yale, Goldman, JP, K2, Galaxy, but let's be more creative on how we hire people from different backgrounds. Like, it's easy to say that. It rings more true when the CEO hears all his young people say it. And you're like, okay, noted. And so I think if you're running a company that, and people say, oh, that's just show. It really isn't just show. Those events really do help transform your culture. I think if you're an individual, and this is a hard thing, is you don't really understand. You could live in New York City your whole life and never know that up in Hunts Point, there's a slave ship, literally a hulking steamship that got brought up from New Orleans 30 years ago that houses 900 to 1,100, mostly black and brown guys waiting trial. It's the worst metaphor I think any city has, because you walk down and it's stuck between the sewage plant, so it smells like shit on one side and the fish market. So you got fish and shit in a slave ship. I was like, oh, what a wonderful city. It's 4 miles from where I'm sitting right now, as the bird flies. And so proximity, go visit a jail or prison. Not easy, do it. Go talk to someone who spent 3 or 4 years in prison. Have a conversation. And how do I do that? Well, you got to make a little effort to do it. We luckily at our firm have hired a bunch of formerly incarcerated people, and their stories are transformative. I say this without trying to sensationalize it, but I've probably had 10 people in the last 2 years at my house, at dinner, at parties that spent more than 10 years in prison for manslaughter or murder or really violent things that they did at one point in their life situationally, and 20 years later, 10 years later, 30 years later, they're just different people. And so this idea that you're not your worst moment, it's easy to say you believe it. It resonates with you when you actually have the experiences of meeting people and saying, wow, change is possible. People aren't their worst moment. They are I would let these guys babysit my kids. And so that comes from proximity. And, proximity is scary, right? And so, but that's, if we want to change the way we think of things, besides writing checks, because that helps a little bit, it's take that extra effort, call an organization, say, hey, I'd love to go visit, tutor at a prison. That doesn't have to be a monster commitment. A small commitment will change your perception of things immensely.
That's great advice. Thank you. I think now we could move. There's some questions coming in, but can you see these, Mike? Or I'll pick a couple here. But
I can't.
One here just to play devil. And I'm sorry, from working from home, the neighbors are cutting their lawn, but that's why I'm going on and off on mute. But one question here from Bill Long, just to play devil's advocate. People once thought the same thing about the gold market, the signal of some kind, as you said about crypto. Why will it be true with crypto, and why didn't it play out with gold?
Listen, I think part of gold's problems in the last 6 months, 12 months, and I was long a ton of gold and crypto, was as crypto built momentum, people think it's a better version of gold than gold. And, I laugh about this camera takes more pictures in an hour than total photographs that were taken in the 20th century. When we make these transitions from analog to digital, they accelerate it faster than we think. And I do think some of gold's issues is the shift to Bitcoin. I also think, Bitcoin went up for 2 reasons: for this macro push and for adoption. And adoption took over as the primary, right? Gold has stabilized a little bit because people are getting jabbed and we're seeing the economy come roaring back. And, being short Eurodollars has made you 25 basis points, hopefully makes you 25 or 50 more. But so there is some sense of maybe the worst is, or maybe Powell will have to flinch, right? We're starting to price some of that in. And so that took a lot of steam out of gold. You could run the gold versus the 2-year or the 5-year. It was a pretty, correlated trade. And so I'm neutral gold now. Tactically, I would probably be short a little bit. Medium term, I'd probably still be long because I don't think we get out of this monetary mess. But I think Bitcoin has just taken the steam out of it in lots of ways.
There's a couple questions here from different viewers, but related to the source of mining. One, a lot of mining's done in China, and then I guess Grants Daily had some comments about this as well. But if so much mining is centralized today in China, is that a risk?
I don't think it's it's not a good thing, but it's also not a huge risk. Like, okay, if China says to the miners, you're banned, you're out of business. Those guys are so quick, they're shipping their machines to Kazakhstan or somewhere else in the mining. And so you might have a hiccup in mining capacity that necessarily isn't existential. And so there's a move, of course, for more geographic diversity in mining and more clean mining. But it's certainly not a good thing, but it's not a fatal flaw.
What are other risks you see? Something that whenever I wake up as an investor allocator and you see a big down market, like the first thing is like, oh, well, you hope you're on the right side of it. And then the second thing is like, well, what about my counterparty risk? So we saw a family office hedge fund come under attack.
Yep.
And
Listen, there
with
will
such a
be
volatile underlying instrument and leverage, we don't know how much leverage is out there. Like how do you think of that risk?
So when I looked at Archipelagos or whatever, I never can pronounce that damn name, Bill Wong's portfolio, I was going on CNBC and I knew they were going to ask me about it. So I picked his top 6 stocks and I created a little index and it roughly traded at 80 vol. And that's where Bitcoin's been trading. And I was like, that son of a gun had a long Bitcoin 5 times leveraged on huge size. Like that's insanity, right? That's offered to retail all the time in Asia, which is insanity. And so if I'm a regulator, these guys are all offshore, right? If I'm a Chinese regulator, I'm a US regulator, I'd be like, in the same way we don't let retail take more than 5x leverage in currencies, or, people shouldn't have access to that much leverage. And I know I'm going to get killed by the crypto community for saying it because it's libertarian. Let me do what I want. But if you believe in regulation at all, you believe you're supposed to be putting guardrails around for people so they don't blow themselves up. And so at one point, that's going to have to kind of get dealt with, I think. And it's certainly already dealt with in regulated markets, but that creates a lot of the volatility, right? It's that leverage. Listen, there are quirks in the system here. You can borrow stable coins, dollar denominated stable coins. And I can, set up, there's a company called Celsius, one called BlockFi, that take in deposits in stable coins. Looks a lot like your bank taking in deposits. But they're stable coins, even though they're dollars, they don't count as deposits. Again, if you're the regulator, you're like, well, hold on, wait a minute. And some of those places are running literally 100 times leverage, and they've got an asset liability mismatch. And so somebody is going to get burnt, and there's going to be, oh my God, I can't believe, people who are that dumb. Like anytime an environment like this grows as fast as it's growing, you're going to have some mini blowups. And I think those are, in general, trading opportunities. Stay away, not get hurt by the Deritrous after it all gets whacked down. But I don't think they're systemic. I don't think, and you never know what systemic is until it hits you in the eye. Right? The biggest trust, the Grayscale Trust, was about a $40 billion kind of faux ETF. It was a closed-end fund that used to trade at a big premium. And people thought that premium would last forever, and then it went to a 50% discount. So there were some hedge funds that lost their shirt. I'm sure there were some credit shops that lost their shirt. But none went out of business, which is interesting. And that was a monstrous move if you think about it. And so the other thing that's happening, and what worries me some, there's so much pent up shortness, from this institutional side, that you're seeing companies that I never thought were that worthy of capital raising their hand and raising a ton of capital. And so you're either going to have CEOs that get a third chance and really do great, but there's a whole lot of capital coming in on the private side. And that, I think it's good in the long run, but it feels a little too easy for some companies that I was like, that guy just raised. And so, be a little careful with how fast the private, psychology happens.
Well, and you're referring to the crypto space, but or across all?
Mostly the crypto space, but listen, across all privates in some degree. You know, it's been
Yeah.
such an amazing place to invest that it worries me just some of how fast the valuations move.
Do you worry that that, like, you going back to the start, how the Fed's got to land the plane, or the central banks, G7, G10, whatever, have to land the plane, but there's always eventually we're gonna have two scenarios, like either really weak economic growth and deflation, and then we have a whole different set of problems, or you will have growth that's sustainable, and the central banks are going to have to pull some liquidity back somehow. And historically, anyway, whenever the central banks start to pull liquidity, it's the tide going out, right? So then you find out where the pocket.
It will be no different this time. It would be, people will get kneecapped in the stock market. They'll get kneecapped in the crypto market. And, you know, I certainly hope that I often put on big hedges, like the fixed income hedges, not just for the money they'll help you make, but as kind of your radar, right?
Right.
At one point, you have to make a decision, game over, right? That this is a paradigm shift, that the Fed is going to hike, not just maybe going to hike. Yeah. And then you got to change your portfolio. Then you got to actually have a lot less beta. You got to have, smart alpha and a lot of hedges on. And you hope you don't lose as much as the next guy. But to think no one's going to lose, like if me and you knew the Fed was going to raise 150 basis points starting in September, we'd make a whole lot of money. And so you got to have some radar in some sense of when you take chips off the table and get less bullish, and when you turn in reverse, or at least get neutral. It doesn't feel like we're close to that yet.
Right. And where do you see the best hedges today? That you mentioned the belly of the U.S. curve being short.
Again, that's my keep it simple, stupid, because I think it's really U.S. policy that's going to drive things. And, Powell is adamant that they're going to run this experiment of letting inflation trade above its, top end of the band, and really get unemployment, and underemployment in. And we'll see how long he can hold, he hasn't, there's not a bead of sweat on his head yet. Like when we see the first bead of sweat, it's probably time to press the hedges. And so I think that's it's the simplest and purest hedge. I'm sure there are lots of other, much more complicated and good ones. A lot of the stay-at-home, stocks had such amazing runs, and the tech stocks had such amazing runs that if that happens, you probably get a reversal there as well.
Yeah, it doesn't quite add up though, because the Fed's saying, look, we want to run inflation over 2%. They then come out and said, look, we'll let it flex maybe above that for a certain amount of time, and we're kind of taking the average. But at the same time, you have the U.S. 10-year at 157 or 1.
Yeah, rates are at the wrong price.
Yeah.
And Keynes famously said, markets can stay irrational longer than we can stay solvent. Rates are just 100 basis points at least at the wrong price. And so to me, that's your hedge. Like, it's almost irresponsible to have a giant long asset portfolio without a monster fixed income hedge, even if you lose a little on your fixed income.
Right. Makes sense. Well, we're coming up on the hour, and Mike, thank you for the time. It was great to catch up and your insights. But Stanley, I'll pass it back to you.
Thank you, Rob, and thank you, Michael. That was excellent, especially for new investors in the blockchain crypto area.